Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome everyone to the 15th episode of the Caribbean Business Review. My name is Joseph Cox, and today I'll be flying solo. Now, this week, our special guest is Dr. Joel Allen, who is a co-founder and executive chairman of Growth Perspectives Limited, a management consultant and investment banker, and indeed a true strategy czar. Now, together, we'll be discussing navigating business strategy in the Caribbean. Now, also on the program is the CBR briefing, where this week we take on the Caribbean youth and jobs, and indeed ask the question why growth isn't creating opportunity, which really represents a deep dive into the challenges and potential solutions to the region's persistent youth unemployment crisis. Now, but before we get there, I want to bring to your attention two critical issues. First, Barbados has launched its first TVET Global Training Center, funded by China and specializing in optoelectronics, electronics, and network cabling. It now joins World Skills International Training Network. Meanwhile, Jamaica, through the Heart NSTA Trust, already operates a national TVET system training over 100,000 Jamaicans annually. Both countries are positioning themselves to capture opportunities from the forecast 130 million new jobs technology will create globally, even as 92 million jobs are projected to disappear. Now, this deserves, in my view at least, central focus as the future of work evolves, and I would strongly encourage other Caribbean nations to follow suit or partner where economies of scale dictate. Second, the African Development Bank estimates that Africa loses $580 billion every year, or $1.6 billion daily, to corruption and illegal and illicit outflows, including $90 billion in illicit flows, $275 billion from profit shifting, and $148 billion from corruption. That's more than triple the continent's $170 billion annual infrastructure gap. The African Development Bank warns that these leakages cost 5 to 7% of GDP annually, erode fiscal space, and stifle sustainable growth. Sadly, unless curbed, Africa's potential will remain constrained despite vast opportunities. Now let's turn to the issues that we are tracking in our Market Watch and Global Pulse segments. Now, coming up in Market Watch this week, Jamaica's economy grows 1.4% in Q2 2025. Republic Bank slashes credit card foreign exchange limits again amid shortages, and Cayman's financial services drive half of government revenue in H1 2025. Then in Global Pulse, Canada is set to scrap retaliatory tariffs against the United States. The African Development Bank warns Africa is losing $580 billion annually to corruption and illicit flows. And the U.S. expands 50% metal tariffs to over 400 products. All that and more this hour on Market Watch and Global Pulse. Coming up next is a CBR briefing. This is the CBR briefing, your essential compass for Caribbean economics, business, and policy. I'm Joseph Cox. Now, on July 15, the UN observed World Youth Skills Day. The global spotlight, however, has since shifted, but for the Caribbean, the issues remain urgent. Yes, our economies are showing signs of recovery. GDP is climbing in some markets. Foreign investment is flowing into tourism, energy, and infrastructure. But here's the uncomfortable truth. For too many young people, that growth hasn't translated into jobs, opportunity, or hope. Youth unemployment remains stubbornly high across much of the region, often double the national average. And if you ask the average job seeker in Kingston, Port of Spain, or Bridgetown, the story is sobering. Graduates struggling to find work in their field. Employers citing skills mismatches despite rising education levels. Young entrepreneurs are locked out of financing or slowed down by bureaucracy. And even at the entry level, the old paradox. Jobs demanding experience from those who have never been given the chance to gain it. The result? Migration. Year after year, some 70% of the region's brightest talent leaves in search of opportunity elsewhere. The brain drain isn't anecdotal, it's measurable and accelerating. Why? Because the jobs aren't there, or when they are, the pathways don't connect. Growth driven by capital intensive sectors like oil or mining or large scale tourism does not automatically create broad based employment. MSMEs, which could absorb youth labor, are still under supported and under digitized. And then there's a mismatch between what our schools produce and what employers need. Graduates trained, but not always employable. Add to this a few more stubborn realities. Accreditation gaps. Too many institutions still offer postgraduate degrees or certificates that aren't recognized internationally. This limits skills portability and labor mobility, particularly under the CSME. Uncertified skills. Many individuals have competencies gained through work or training but lack formal certification, preventing them from accessing opportunities. And for some U.S. firms, insurance rules even require American certification before tradesmen or technicians can be engaged. Then there's a matter of information asymmetry. Jobs exist, candidates exist, but they don't always find each other. Employers complain about shortages, yet often look outside the region because it's cheaper and less bureaucratic to hire through work permits than via, say, the CSME skills certificate. And of course, unconscious bias. Too often, locally or regionally trained graduates are overlooked in favor of those with foreign credentials, even when the skills are equivalent. All of this is happening while the global labor market itself is transforming. The World Economic Forum projects that by 2030, 39% of today's skills will be obsolete or transformed. Artificial intelligence alone could displace up to 300 million jobs worldwide. And in the fields most exposed to AI, the pace of change in employer demands has jumped by 66% in just 1 year. In fact, recent studies show that in the European Union, 43% of students lack basic digital skills, with the US even higher at 51%. For the Caribbean, where educational and digital divides are sharper, the risks are even greater. For Caribbean youth, that's a double threat. We are not building enough jobs at home, and we are not preparing enough workers for the jobs of tomorrow. And looming risks like the U.S. Call Center Worker and Consumer Protection Act, which restricts U.S. federal contracts from going to overseas call centers, poses a potential threat to thousands of Caribbean jobs in the BPO sector. So where do we go from here? First, we need bold investment in youth employability, digital skills, boot camps, regional apprenticeship programs, and job placement initiatives that give young people the experience they need to break the no experience, no job cycle. Second, we must rethink MSME support, not just with credit, but with simplified rules, digitization assistance, and stronger export linkages across the region. Third, we have to address accreditation and certification gaps, expand access to internationally recognized credentials while create systems to validate and certify skills that are already demonstrable, even if uncertified. Fourth, we must fix labor market information flows, build transparent regional platforms so that employers and job seekers can actually find each other, reducing the reliance on extra-regional recruitment. And finally, we need to reframe migration, not just as a loss, but also as a potential asset through remittances, diaspora investment, and brain circulation. Above all, youth employment must be treated as a core economic indicator on par with GDP growth and fiscal balance. Because a region that cannot create opportunities for its young people cannot claim to be truly growing. The Caribbean doesn't lack talent. It doesn't lack creativity. What it lacks is the determination to turn growth into jobs that matter and jobs that last. Well, this has been your Caribbean Business Review. I'm Joseph Cox. Please stay tuned for more insights into the region's business, financial, and economic landscape with an eye on equity.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Okay, welcome back, everybody. This is the Caribbean Business Review. I'm Joseph Cox. And today we'll be having a conversation with a very special guest. So we're looking at the issue of business strategy for Caribbean growth. And once you hear about strategy, if you're in the business world, there's one name that comes to mind. Even if the company don't ring the bell, the name is the man. There's Dr. Joel Allen, and Joel is the co-founder and executive chairman of Growth Perspectives Limited. Joel, welcome to the program.
Thank you, Joseph. It's a pleasure to be here, and greetings.
Yes, man. Good. All right, Joel, we're looking at the whole matter of strategy. One of the challenges that I recognize with our region, frankly speaking, I'm speaking primarily about our business community now, is that we have a scenario whereby most of the businesses seem to be in survival mode. And one wonders, is it that even after a long period in operation, but you wonder, what is it about the mindset that keeps them in that stagnant and that static place? Is it that there are no strategies to treat with it? Is it a mindset issue? What is the problem from where you sit?
Yeah, I think the problem is probably multifaceted. It is a combination of culture, mindset, and this idea of risk. Yeah, the degree to which we in the region are open to taking risk in order to move forward. And by risk, one of the things that is tied to that is innovation, right? To what extent we're prepared to try new things and to step into the unknown territory. We like to play it safe, and safe will probably keep you going for a while, but it won't get you. You won't move to the stars with safe. You're going to remain on Earth.
Yeah, but I mean, all right, being safe is one thing, but you have to also be pragmatic. And in fact, our life is coming out of, for example, the COVID-19 experience. The whole business dynamic has changed, but I don't get the impression that our businesses have evolved with that. And therefore, it begs the question, I mean, safe, but safe from who? Safe from yourself? Because honestly, if you don't evolve, your business is likely to stagnate and die over the medium term.
Right. And I think that is what is happening. That death is sometimes not a fast one, but a slow one. And, but with AI, that is likely to sort of increase. The pace of death is likely to increase, and the rate of death is likely to increase. So coming out of the COVID-19 pandemic, business models had to be changed, but it seems like we're going back to pre-pandemic levels in our mindset. Yeah, during the pandemic, for survival reasons, most entities had to sort of digitize. They had to go online and they were doing business online. Many of them were doing business online. They haven't really changed that model. So they haven't developed their business model. They haven't enhanced it, moving from digitization to, say, digital transformation, which is actually a deeper thing. And so we're sort of stuck in that space. And now the context, the post-pandemic context, is one that is even driven in a bigger way by technology. And so there's a need for adaptation and just to rethink business models and to rethink the way businesses operate in the region. But we've been quite slow we've been slow to the party. Yeah. Business.
Well, I don't know that I don't know that we really have the luxury of time, because when I'm looking at it, what I'm seeing is a situation whereby, I mean, you mentioned the whole matter of AI. I was just reading a report a couple of days ago where one of the things that came out is that by 2030, 39% of jobs right now are likely to be either obsolete or severely transformed with the advent of AI. So, I mean, I don't know that we really have any luxury, any time delay or any lag in terms of implementation. But the key question really is, how do you get over this hurdle? Because it is a hurdle.
Yes. Well, what we have, it starts with leadership. Leadership is everything. And we have to get that change in mindset and culture. These kind of things take a while sometimes. You painted a picture of what that macro context look like, and I totally agree with you that time is not on our side. So I think going into the rest of the year and, of course, coming into 2026, I expect to see a faster pace of change within the region, because a part of the reason why our change has been so slow relative to other places is because our markets are smaller. And if there were larger markets, some of the bigger global players would be more interested in setting up shop, and that would force change at a faster pace. So we've been somewhat insulated by the smallness of our markets, and to some degree by sort of protectionism at the country level, which certainly can't persist for much longer.
No.
So we have to
No,
change. So it's a change in mindset, and
uh-huh.
we have to keep engaging the leadership of businesses across the region, and really showing them that different pathway towards change. It need not be similar to the European and North American pathway, right? Because our cultural context is different. But we too must change or die. So I think that engagement is going to be critical. And I also think that there's a role for political leadership, governmental leadership in this, in engaging local private sectors towards supporting this change that must happen. Because if it doesn't happen, it's going to affect the macro context. Jobs are going to be lost. And so we don't want to wait until that happens and we're running around like headless chickens trying to figure out how do we adapt. Yeah.
Indeed. But Joel, part of the thing that I found in my experience at least is that there is a decided resistance to change. And even where there is a plan in place, the plan is not dynamic, it's static. Now, from where you sit, you have vast experience in this area of strategic planning, etc. What would be, and I mean, I'm not asking you to give away trade secrets, but what would be the kind of bare bones strategic plan, and how they engage in that for the average business in this region? What is it that they would need to be doing, frankly speaking, now to move forward?
All right. So I think at two-tier, the sort of conventional approach to strategy is probably not going to work because the pace of change in the external environment is so fast, right? So the traditional approach where you sit and you engage, you look at the external environment, you look at the internal environment, right? You might do a SWOT analysis, you do a pestle analysis, and so on, and then you get an idea as to what the context is at the current time. Problem with that is that the context is changing so fast, you now need to predict what the context is likely to be over the next year, the next 3 years, the next 5 years. And so you now need to look at some other considerations like media, informatics, demographics, and just the type of technologies that are likely to sort of affect the industry that you're in and the firm that you're in. So those are some additives. But at the same time, when we build out the strategic plan for an organization, these organizations need to now look at what we call the emergent strategies. So you have to make space for adaptation in terms of what's happening in that external context. So in building out the strategy nowadays, we're advocating that there should be a component that looks at how you're going to respond to what comes up in the market, and you make resources available for that, and so on and so forth. So it's a sort of a dual strategy that deals with where you see the market going and your prediction in terms of how you're going to position yourself in that market. But then some things may happen in the market, may fold, that you need to adapt to. And so you must be able to devise some sort of emergent strategy that's going to address those considerations as you go along. So strategic planning is likely to be different from the conventional approach, where you just
I take your point quite well. What my question to you would be, you have experience both within the region and of course outside of the region. So you have the global experience as well as the regional. How difficult or how different is it because what you've described there sounds to me eminently sensible, but basic bare bones strategic engagement for anybody, frankly. So how different would it be in the execution in, say, the regional market vis-a-vis the global environment?
Right. What I can say before I tackle that one, I want to say that there's a big issue that we have in the region, and that is its strategy execution. So we have a big problem with strategy execution in the region. We have what we call an implementation deficit. So based on some data that we have gathered, we are seeing that between 45 and say 75% of the strategic plans that are developed are sort of implemented within the region. So, across different types of organizations. So there is, even in the best organizations within the region, there is some sort of deficit around implementation. And so it calls for a rethink of how we implement strategy. Now, one of the critical things that we need to look at, and I know that this is a big deal for you, and that is communication. Right? That has been one of the weaknesses that we have had, and that has prevented us from sort of optimizing on the implementation end. Another thing that we have observed is that strategy for many organizations in the region is looked at the director level and the executive level. And so we're not going further down that sort of drill down in the organization to the middle management level and even to supervisory level. That's a bit of a gap. And outside of the region, this is something that a lot of organizations do. They engage more widely, and they involve lower down managers, middle managers, and supervisors are involved in the strategic planning process. And so the ownership rate is higher. And if you own something, you're more likely to get it done. So there's a need for a rethink around that. There's another thing. So we have this problem with implementation, but a part of the issue too is about the mismatch between the alignment of resources and in the strategic plan. So we have looked at a number of strategic plans that we have been engaged to sort of evaluate, and we ask people, what are you focused on? We're focused on A, B, C. But when we do our analysis, we're realizing that the resources have been sort of allocated to different areas, not ABC, but DEF instead. So we said, no, you're not focusing on ABC. You say you are, but your resources are sort of towards DEF rather than ABC. So that misalignment is another critical thing that we have observed.
No, but all right, I hear you on that, and you know what you're saying it makes perfect sense. But then, if there is, and you pointed, yes, I'm a big believer in communication because that's how you can get the execution. But now we go down to real basics because if there is a predominant view that strategy and strategic planning only occurs at the executive level, then you will never get that buy-in. And if half of it won't happen, the other issue, of course, is how you finance the plan. Because the honest truth of it, I think, and I don't know if you agree with me, Joel, but it strikes me that in a number of instances, persons have made the distinction between basically a plan and a strategy. Right? So, you know, so you talk about misalignment. The truth of it is that if you get caught up, if you will get so caught up into the day-to-day, then you was won't. Because it just won't occur. And that's just a reality. And that is what is bothering me because I'm not seeing. All right. So for example, in the international market, and this has been highlighted even more so with all the what's going on with the tariffs and so on. In the national markets, what we have are basically omni-channel solutions now at the retail level. So you have people who they have, in some cases, they still have a storefront, but they're doing things online, etc., etc. You have your chat bots that people interact with, so you get that kind of personalized experience, etc., etc. In the region, to be truthful, by and large, you go into a store, and the first question that defines you as being from the Caribbean, frankly, and in a Caribbean store is to ask, do you work here?
Yes.
Right? No, it's a serious thing. So, I mean, I'm just wondering, because the fact of life is that our market, if you reference the issue of size, and true, the physical country size may be small, but the truth of it is that right now our goods are being marketed on a global scale because by way of the internet, people have choices every which way. So you're competing against a global product and a global environment. But it's as if we're not seeing that type of transition. We're not seeing the thinking. And you can't tell me that people is that people don't know. So what is it? Because this is surely not safe.
Yes. Well, thinking is an issue. The strategic thinking and a number of organizations. We have seen a growing number of organizations actually focused on strategic thinking and understanding it as part of their strategic planning process. Because without strategic thinking, strategic planning becomes just a routine exercise that you take some time off your work. It doesn't change the price of flour or fish and chips, right? Which is actually very, very important for shareholders and other stakeholders. So you have that issue. The other issue that we have to tackle is this idea of differentiation, right? Because we've observed this as well, that many of the firms that are building out strategic plans, there's very little differentiation between Tom Jones Enterprise and Mary Jane and Company. So there's a lot of mimicking, basically copying, and sometimes copying it in such a poor way that you're not realizing that Mary Jane Enterprise is actually different from your enterprise,
Right.
and so on. So there's a need for focus on making it less homogeneous, the strategies, and building out a customized strategy for the individual organization that deals with the particular context within which you operate, the sector, the country, the local and organizational characteristics, and building that out to leverage the resources that you have at your disposal to collaborate with others where you fall short and where you can add value to them and they can add value to you as an organization. So there's a need for a broader rethink within the region in order for us to start to see more value being created. We're not going to get more innovation unless we start to see this rethink, right? And it requires a cultural shift, and the leadership will be a critical part of that process. So we have to engage your leaders and so on to change that mindset, and the mindset around who builds the strategy. Strategy, the leadership doesn't have all the ideas. Sometimes you go into an organization, the supervisor has some really brilliant ideas, but they never really come to the fore. So if you engage them, you have nothing to lose, really. I mean, if you get the ideas and you don't like them, then you don't have
so
to
be it,
pursue.
yeah, of course. Of course. But the question, it really leads into this then, Joel. Does the average manager, or let me put it another way, is this really more a challenge with leadership discipline in terms of execution versus anything else? Isn't that what it really comes down to in terms of the actual execution, getting these things going, being focused? You can be, everything, as I always give this joke, if everything is a crisis and nothing is a crisis, you have to be focused.
You must be
But
focused.
does it come down to an issue of frankly leadership discipline, at least in one respect?
In one respect, it does, but I think it's in a broader sense, it's probably a cultural thing around how we view leadership in general and the role of leadership within organizations. And so the whole idea of incorporating lower level people in these high level decision making is something that that's more of a cultural shift, more so than the discipline. The discipline is more on the execution side and really just being able to build something and follow through with it. And that's a critical component. But I think before we even get to executing anything, the building of it is important. And who is involved in the building can help with the execution. It's integrated, right? It's all integrated. It's not a separate thing. It's a part of this strategy formation process.
No, I get you, but you see, once you get into that sort of mindset, the challenge is even where you do have a strategic plan, the risk in basically that sort of top-down approach is that you might be, which is a common error in these things, you might be more willing to rely on the KPIs to say that, the KPIs, that the key performance indicators that you have developed, once you are hitting those indicators and all is well, when sometimes one, there's misalignment of the indicators, and two, sometimes, frankly speaking, the indicators only tell part of the story and you're missing there's a whole underbelly that you're missing. So how do you, you're in this business in terms of strategy, Joel, for a long time. How do you navigate that through through this with this sort of mindset? How you deal with that?
It's a work in progress. I think the whole issue around engagement, there are two things that we typically like to look at. Staff engagement is a critical consideration, because you talk about KPIs. If your staff is not, if you don't have an engaged staff, forget about other KPIs, right? We're not going to deliver anything. And customer satisfaction is another one that we look at. Increasingly, we're looking at how you engage with your other stakeholders, right? Because strategies are a large part of it is about stakeholder management. And if when you put all of these groups together, your regulators, your shareholders, your customers, your staff, if you are not engaging these groups properly, then you're going to have a mismatch. Even if you're hitting some of these KPIs that you consider to be critical, for the short term, you might look good and feel, yes, you give yourself a pat on the back. We have met those KPIs. But for the medium to long term, you're going to run into troubles, right? Because your baseline is not strong enough. And so the engagement of these different stakeholder groups is another thing that must be part of any strategy and must be measured as part of any respected strategy.
No, indeed. And that's where because we're coming up towards the end of our conversation, but that's one of the areas I want to also focus on, the whole matter of monitoring and evaluation of the plan, the strategies, because frankly, once a year is not sufficient. I'm sorry, it's not. But again, if you're at this stage of it's just a top-down strategy or top-down planning that you're engaged in, you might be just become completely overwhelmed with it. You have nobody monitoring your strategy and the thing. And by the time you find out, you might be too far down the road anyway.
Absolutely. So that is a critical thing, Joseph, monitoring and evaluation. And one of the things I've observed, you talked about the difference between regional and global. Other markets, for instance, in the Australasian market, there's a lot more outsourcing of some of these activities to firms, external firms, because as compared to the Caribbean, where we like to own everything internally, and so you're going to hire more people to fill these gaps rather than sort of outsource, have a small team that sort of monitors and give oversight, and then outsource the bulk of it to external consultants or other partners, right? And that allows you to benefit from that external view, which in other regions, we see that in New Zealand, for instance, this is quite common. Many of the firms, SMEs and so on, they focus on their core business and they outsource non-core activities to external partners. And so they're able to get the best of both worlds as a result of doing that. So that's a critical thing. That includes also the monitoring and evaluation.
Right.
It'd be a joint process between internal and external. So you benefit from different perspectives there. But I have 5 messages that I think that are critical for us in the region to consider, right? The leadership. If you permit me, Joseph, I just...
Go ahead. Go right ahead.
Right. So I think we need to focus on think and act beyond the boundaries of conventional thought and strategy, the boundaries of daily operations, the boundaries of local and regional spaces, and quasi-innovations. The other one is incorporate middle managers, even some supervisors, into the strategy formation process and solicit their help in getting buy-in from the general staff. Number 3, ensure that organizational components are aligned with the strategic plan. And what do I mean by the organizational components? I'm talking about the people, the learning, the knowledge structure, the systems, internal systems, and so on. Ensure that they're aligned. And the resources, the allocation of resources, ensure that they're aligned. Number 4, focus on increasing strategic plan implementation rates by communicating more, learning more, monitoring and evaluating more, and adapting and changing more, right? So those are absolutely critical. That will help us to move these sort of strategy implementation rate from the band of 45 to 75 upward to 90 to 100%. And then we'll get more value. More value will be created, more jobs will be created, and the economic growth process will get more economic growth. The 5th one, pursue deliberate and emergent strategies. So we need to, in building strategic plans nowadays, we need to now look at not just defining a set of goals and objectives and putting resources behind them and the timelines over a period of time, says 3 to 5 years. We need to think longer term, but we need to also have a component of the strategy that is emergent, that focuses on how we respond to the developments in the markets, right, as we go along. So those are 5 critical things that we need.
No, well, I mean, all right, I just, because as we're wrapping up this conversation, I touch on the last one, what you call the emergent framework, basically.
Um,
In simple, plain language, just means that the strategy must be nimble. It must be adaptable over time, which is part of the issue that I have in terms of if you have a management structure that is hierarchical, the old-fashioned hierarchical structure, if there is staff disengagement, right? Because there's something, truthfully, I think a number of companies need to actually get into that space where they're doing, from time to time, staff engagement surveys. But in the other parts of it, no, is that if there's that disconnect at the fundamental level, and you're only listening to yourself, and you're in a bubble where you're listening to yourself and your supporters, then I'm not sure how the emergent strategy will actually emerge, to put it another way.
yes, so that's why it's all integrated, right? It's not a one-shot thing, but all of these things are integrated. And if we don't change that culture and change it fast, because ideas are not restricted to one or two set of people, right? Ideas can come from anywhere, and we need to be open to ideas, because we may think a certain way, but if we open our minds to another perspective, it allows us to say, that might be something that could enrich the strategy for my organization. And at the same time, you're getting more engagement because you're listening to lower level people. People don't, when they come to work, they want to feel valued, right? They want to make a contribution. And if they are given that opportunity to make that contribution, there's likely to be much more engagement. You're going to increase productivity as a result, because they feel, oh, these people are listening to me. My views matter, right? You're going to get a lot more engagement. You're going to get a lot more productivity, and you'll increase the strategy implementation rate. You are likely to also get more diverse views, which if you're just getting one set of views, then that is unlimited. If your strategy is just based on what you and I think, Joseph,
Yeah.
and let's say we are in the economic space, finance and economic space, that's our thinking. If we're not opening it up to people from marketing, people from HR, people from supply chain and so on, people from engineering and science, then basically we're limited. Our perspective is limited. And so the strategy that we produce is likely to be a reflection of just a limited perspective, and it could be behind it. So yeah, it's critical.
Yeah.
I
could not.
Sorry.
Say again?
I'm saying if we manage to sort of unlock this sort of thing, then we will see a lot more growth, business growth, and sustainability within the Caribbean region. And I think it's likely to spill over in the wider economy.
Well, put it this way, we don't have much of a choice where that is concerned, because the world is evolving. And as I said to you, it's either you innovate or you will die. And that's just a plain fact of life. So we don't, as we said at the top of the program, I said now at the end, we don't have the luxury of time. And your point is well taken. So on that note, Dr. Joel Allen, co-founder and executive chairman of Growth Perspectives, we do thank you for your time in this conversation today. I think it was timely. Joel, I always appreciate your insights as somebody with global experience, not just regional, but global experience in treating with the whole matter of strategy. So until such time, we do thank you very much, Joel, and we'll catch up at another point in time.
Cheers, Joseph. Thank you.
All right. Thanks much. Good.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
Welcome to Market Watch. I'm Joseph Cox, bringing you the latest business, finance, and economic developments from across the Caribbean. The Fiscal Responsibility Council in the Bahamas says achieving fiscal targets will require pension reform and further rationalization of state-owned enterprises. Pension costs reached $182.7 million last fiscal year and are projected to climb to $201.6 million by fiscal year 2025-26. Government guarantees stand near $329 million once SBDC liabilities are included. The council backs shifting new public servants to a contributory scheme and stronger state-owned enterprises oversight. In Grenada, government revenues fell to EC $627.7 million in the first half of 2025, down over $112 million EC from last year, but still above target. A smaller than expected deficit reflects spending restraint, while a new household bond set for October will broaden investor participation and deepen domestic markets. In the Cayman Islands, cruise arrivals are proving resilient, projected at 1.2 million passengers in both 2025 and 2026, rising to 1.4 million in 2027 before easing to 1.1 million in 2028. Though below the 2018-19 peaks, the outlook is steadier than feared, with stayover tourism now the stronger growth driver. In Trinidad and Tobago, food prices eased in July, with declines for chicken, rice, and potatoes keeping annual inflation steady at 1.5%. But foreign exchange shortages remain acute. Republic Bank has again slashed its credit card FX limit, now capped at $2,500 per billing cycle, down 75% in less than 2 years. Turning to Jamaica, GDP expanded 1.4% in Q2 of 2025, led by agriculture, tourism, and construction, while unemployment fell to 3.3% in April. Still, inflation edged up 0.3% in July, driven by higher food and fuel prices. The Bank of Jamaica held its policy rate at 5.75%, balancing domestic stability with external risks from global tariffs and import costs. In our country roundup, Barbados opened its first TVET Global Training Center with Chinese funding to align workforce skills with international standards. The Bahamas signed a $30 million IDB loan to strengthen blue economy SMEs, aquaculture, and climate resilience. Antigua and Barbuda has launched a farmer information system to digitize crop and land data for 1,500 producers. Bermuda reinsurers posted the world's strongest capital growth in 2024, up 16% despite hurricane losses. Jamaica will boost airlift capacity by 4.4% for the upcoming winter season, including new U.S., Canadian, and European routes. St. Kitts and Nevis added an extra VAT-free day after Hurricane Erin disrupted back-to-school shopping. Now for headlines to watch. Kingston Wharves delivered 17% revenue growth to $6 billion in H1, with profits up 21% on strong terminal activity. Pan Jamaica Group saw net profits surge 80% to $4.6 billion in H1, led by financial services and specialty foods. Eplis Limited profits jumped nearly fourfold to $410 million Jamaican dollars on portfolio growth and third-party capital. And A.S. Bryden & Sons will list on the Trinidad and Tobago Stock Exchange on August 29th, strengthening local capital markets. Turning to the Caribbean currency markets, the Bahamian dollar remains pegged at parity with the U.S. dollar. The Barbados dollar trades at $2.03, while Belize dollar at $2.02, and the OECS dollar at $2.71. The Jamaican dollar stood at $160.84. The Trinidad and Tobago dollar holds at $6.80 TT, and the Guyana dollar is $218 to 1. In Haiti, the gourd is cents to the US dollar, while Suriname trades at 38.39 to the US dollar. On the regional stock exchanges, the JSE index rose 1.13% to 315,338 points, while the All T&T index slipped 0.70% to 1,458 points. Other markets, including the BISX, all share, Barbados, Bermuda, and the ECSC all closed flat. Top gainers this week were 138 student living variable preference share, up 13.2% to $243.16 Jamaican, and Sagicor Real Estate X Fund up 11.9% to $7.25 Jamaican. Top decliners included Pulse Investments down 8.2% to 78 cents Jamaican, and Angostura Holdings down 7.2% to $13.20. Now that's it for this edition of Market Watch. I'm Joseph Cox. Global Pulse is up next. This is CBR. Welcome to Global Pulse. I'm Joseph Cox, bringing you the latest international developments shaping trade, markets, and the global economy. We begin with Canada, where Prime Minister Mark Carney says all duties on CUSMA-covered American goods will be removed by September 1. However, tariffs will remain on steel, aluminum, and autos. In the meantime, inflation eased to 1.7% in July as gasoline prices plunged more than 16% year-on-year, but core inflation stayed sticky at about 3%, with rents up more than 5%. In the United States, residential construction jumped 5.2% in July to 1.43 million units, led by an 11.6% surge in multifamily projects. Single-family starts also rose, but permits fell to a 5-year low, pointing to weaker momentum ahead. At the same time, S&P Global reaffirmed America's AA+ rating, citing tariff revenues offsetting fiscal risks, even as federal debt topped $37 trillion and interest costs surpassed $1 trillion this year. Across the United Kingdom and Europe, Britain's GDP at the end of 2023 was revised up to 2.2% above pre-pandemic levels, but growth still trails peers. UK inflation rose to 3.8% in July, the highest since early 2024, driven by record airfare increases and higher fuel costs. In the euro area, Q2 GDP grew 0.2% as Spain and France expanded, while Germany and Italy slipped. Services hit record highs even as industrial output weakened and debt levels ticked up. In Asia, Japan's GDP rose 0.3% in Q2, stronger than expected, with exports rebounding despite U.S. auto tariffs. Annualized growth hit 1%, prompting the Bank of Japan to raise its outlook slightly. In Taiwan, export orders surged 15.2% in July, the sixth straight monthly increase powered by AI-driven demand for electronics and high-performance computing. However, Pakistan slipped back into deficit in July, recording a $254 million shortfall after a rare June surplus. Remittances remain a lifeline, but rupee volatility and rising oil costs threaten stability. In Africa, the African Development Bank warned the continent is losing $580 billion annually to corruption and illicit financial flows, more than triple its infrastructure gap. The bank urged governments to stem leakages rather than increase borrowing. Now for headlines to watch. Global luxury housing cooled in Q2 with Hong Kong down 14%, while Seoul, Tokyo, and Dubai posted double-digit gains. Hong Kong's jobless rate rose to 3.7%, the highest in nearly 3 years, even as retail and restaurant sales improved. Eurozone PMI climbed to 51.1 in August, its highest in 15 months, signaling a rebound in manufacturing and new orders. Brussels and Washington sealed a trade deal capping U.S. tariffs on EU autos, chips, and pharmaceuticals at 15% in exchange for EU concessions. Turning to energy markets, oil prices firmed with West Texas Intermediate crude at $63.77 per barrel, up 0.39%. Brent crude at $67.79 US, up 0.18%, and the OPEC basket up 2% to $70.01. Natural gas fell sharply, down 4.7% to $2.69. On the global stock exchanges, U.S. equities surged with the Dow Jones closing at 45,632 points, up 1.89%. The S&P 500 at 6,467, up 1.52 points, and the Nasdaq at 21,623, up 1.88%. Europe saw modest gains. London's FTSE 100 added 0.13%, the Germany's DAX rose 0.29%, and France's CAC 40 climbed 0.40%. In Asia, Japan's Nikkei jumped 1.7% to 43,378, while Hong Kong's Hang Seng gained 0.9%. Stocks surged on Friday, with the Dow achieving its first new high since December after Fed Chair Jerome Powell signaled September rate cuts may be warranted. The dovish tone lifted the S&P 500 and Nasdaq to strong gains. Bonds rallied, volatility eased, and traders priced in an 83% chance of a 0.25% cut. Now that's it for this edition of Global Pulse. I'm Joseph Cox, and this is the Caribbean Business Review. And that's a wrap for this week and for Season 1 of the Caribbean Business Review. Yes, Season 1 of the Caribbean Business Review comes to a close, and indeed, ladies and gentlemen, what a journey it has been. Since our launch on May 18th, 2025, our goal has been simple: bring sharp, insightful conversations on Caribbean business, economics, and strategy to a wider audience. In just the last 6 weeks, across our social platforms, our content has reached over 300,000 views. Clear proof that there is a real appetite for thoughtful Caribbean business dialogue in fast-moving digital spaces. Our companion newsletter, the Caribbean Financial Dispatch, continues to grow steadily, and we are grateful for the partnership with MKR Radio, which amplified the reach of this platform from early on. I want to extend my heartfelt thanks to Sherry Ann Farquharson and Claudine Lloyd for their invaluable contributions to Season 1 and to our long list of guests, true change makers in their respective fields. A special word of thanks to this week's guest, Dr. Joel Allen, who is the Executive Chairman of Growth Perspectives Limited, for an enlightening discussion on navigating business strategy in the Caribbean. Key takeaways included: 1. The Caribbean business community often operates in survival mode due to a risk-averse mindset. 2. A significant implementation gap persists in strategy execution across the region. And 3. Emergent strategies are essential to adapt to shifting markets. Now, if you have missed any of our CBR briefings, a dedicated playlist is now available on our YouTube channel. And remember, full episodes of this program are also on Spotify. Season 2 of CBR kicks off on September 7th, 2025. In the meantime, the Caribbean Financial Dispatch newsletter will continue weekly. The latest edition is available via josephcox.org, our LinkedIn channel, WhatsApp channels, and by emailing the Caribbean Business Review at gmail.com to subscribe. To our audience, thank you for your continued engagement. Please continue to like, share, and subscribe across TikTok, YouTube, Spotify, LinkedIn, Instagram, and X. Until next season, I'm Joseph Cox, and this has been the Caribbean Business Review.